Even worse than last Friday's huge smackdown, the price of silver dropped by more than 8% on Tuesday, making it one of the worst losses in years. Let's discuss what went wrong and why silver's price has reason to be optimistic about the future. How about we embark on an adventure? Yes, it has been a tremendous slaughter for every metal imaginable. The silver price has dropped precipitously today. There is no other way to describe it. Although this sort of action is predictable in some respects, the recent decline has been quite sharp. You know, it always seems to go up a little bit more when it goes down than when it goes up. I would call that consolidation. This is a tremendous drop in price. What is happening here is panic selling. In terms of selling and profit taking, the markets are obviously in panic mode. Consequently, this isn't shocking to us in every respect. Just moments before the market closes, here is the drama unfolding on the tape in relation to the values of precious metals. Gold fell more than 5%, or $232.10, to $4,125. Gold remains within the $4,100 range. In contrast to silver's current 7.4% decline, gold is performing exceptionally well. This very second, gold has dropped $3.88 to $48.57. It broke past the $50 mark with ease. I believe nonetheless that we will witness its return, and I believe that it will return soon, everyone. Palladium fell 6.27%, and palladium platinum fell more than 5%. Rhodium platinum and palladium were all negatively impacted. Everyone, this is the time to buy. Look around and take a look at these huge smackdowns. Summit Metals is probably going to be really fair, although I haven't checked many sites yet. However, you could visit Summit Metals to see if they have any specials available to you. Also, to witness firsthand their excellent customer service, click the link in the description below. You should also mention that Uncle Sal sent you. To that end, this sort of thing happening with silver shouldn't come as a surprise, because it is an extremely volatile metal. The amount of precipitation today startled me a little. But seriously, why is this happening? I will be making reference to two works. One, which offers a fascinating perspective on the current situation and the reasons behind the precipitous decline in the prices of gold and silver. Here we find an article by Brian O'Connell. Investors in precious metals, like gold and silver, rode a profit wave in 2025. A good year for those who want to diversify their portfolios with some safety nets. We have been quite fortunate thus far in 2025, as I have mentioned numerous times on this channel. And this is the kind of thing we may anticipate. Again, this is just one of those things happening, and we just have to deal with it as it comes. Today, we took a serious knock. Now, according to the benchmark SPDR Gold Shares ETF, gold's value has increased by 60% year to date, after having gained by approximately 56% in the preceding year. This is not, however, an increase in worth. The price has gone up. In reality, its worth is quantifiable in terms of money, but its true worth goes beyond that. With a 62.6% increase in the last year and a 78.4% increase so far this year, silver's price has skyrocketed. But precious metal prices have been falling for the past week, with silver down 5% and gold falling 2%. Unsurprisingly, that happened earlier. Obviously, we noticed that it took a significantly heavier knock today, falling by 8% or more. Additionally, investors' allocation to precious metals has changed. According to Daniela Sabine Hawthorne, a senior market analyst at Capital.com, the upward momentum in gold and silver appears to have lost steam at the beginning of the week. Reversal is not totally unexpected because the trade had grown pretty crowded and was running little hot given the levels of both markets. Despite the short-term problems with gold and silver, Hawthorne has stated that commodities investors shouldn't panic just yet. There will very certainly be a large amount of profit-taking today, as both gold and silver were set up for a correction. With long-term support still in place, the fundamentals haven't changed though. Even while there had been encouraging trade news, the rally's intensity over the previous month may have been overblown, increasing the likelihood of a further retreat. The recent reversal in gold and silver prices is due to more than just that. One explanation is that the unexpected reversal of last week's enhanced margin requirements on the Shanghai Exchange is influencing gold and silver prices, which in turn has caused a sell-off that has moved from Asia to the rest of the world, particularly in the futures market. Some of the present rally may have been driven by speculation, given the steepness of the retracements we're seeing. A lack of physical supply, particularly in relation to the LBMA, is another factor driving silver's price increase. This shortage has not yet eased to the same extent, and may be causing investors to lose faith. In Elliott's view, a physical shortage-driven rally would remain unabated, even if a steep sell-off were to occur as weaker hands and speculators were driven out. At this time, it is having no effect on platinum prices and other metals. Markets are also feeling the effects of the geopolitical tensions between the United States and China. Deals involving rare earths have been finalized in Australia. That is also a major development, in my opinion. That may have had a part, but Kitco is also covering the highly significant and attention-grabbing severe volatility in gold and silver prices, which are seeing their greatest one-day decrease in 4.5 years, and correspondingly drawing a lot of attention. According to analysts, there is potential for both precious metals and markets to decline more, but both are still on solid, long-term upward trajectories. Thus, that is what is happening there. There has been persistent selling pressure throughout the North American trading session, which started with the opening of the London market. Gold and silver were sold off, according to some analysts, because of rising optimism over the US-China trade conflict and the record high equities prices in Japan's Nikkei 225 index. On the other hand, some argue that the market's recent meteoric rise in price is mostly due to technical selling. Experts at TD Securities believe that the recent price correction in gold is due solely to profit-taking. On numerous fronts, our positioning screens are extremely rapid. No amount will convince algos to purchase more. Leverage in the risk parity and vol control funds is close to the limits that make sense. The over-the-counter uncertainties have probably exhausted macro funds. Remarkably, the bid from the central bank has dropped. No central bank purchases have been obstructed. The retail sector is still struggling, and China's buyers are on strike. Making a profit is the way to go. There may be a buying stop, but you can still sell because of it. It was hinted at by someone in a remark they left on my video earlier today. As a result, it's a fascinating sight. Now, earlier today, I recorded a video on gold, and it was featured on Bill Maher's late night talk program. You should see that video. At the very bottom of this video, you'll see a link to it. Now, market analyst Fawad Razakzada of Citi Index and Forex said in a report published on Tuesday that today's sell-off was inevitable, given the magnitude of this year's gain. Investors have begun to take profit, voluntarily or not, after the record-breaking run. Some have questioned why it took so long, given the high volume of purchases in recent months. For the first time in what seemed like an eternity, there is some genuine selling pressure thanks to profit-taking and long-side liquidation. I agree with you there. Additionally, I will explain that we should consider profit-taking as an inherent component of a market system. Yes, I understand. Now is the time for the natural market. Within this, I primarily think. Additionally, one could argue that repressive actions are also taking place. The possibility is still there. But compared to the 977 million ounces that changed hands following Friday's smackdown, today's paper silver trading figures should be fascinating to watch. How much additional could be transferred using this method? Now, of course, it's just paper silver and not the real thing. But keep in mind, folks, that the basics are still the same for silver, as I've merely hinted at in a few of these pieces. Believe it or not, silver is still looking good. Plus, I believe we will discuss $50 silver again, possibly very soon. Although we may observe a reduction or leveling off of the selling pressure, I am unable to envision much more of it at this stage. Be advised that the Federal Reserve is scheduled to convene soon, during which they are expected to slash interest rates by an additional quarter point. In the upcoming meeting, I highly doubt that they will reduce by half a point. Regarding that, I haven't reviewed the probability statistics recently, but other things are happening nevertheless. Furthermore, other geopolitical issues exist. A meeting between Trump and Putin is still far from scheduled. Even while the situation in Gaza eventually returned to a ceasefire, it did heat up again. Therefore, for how much longer? I am uncertain. That being said, there isn't much discussion of it as we navigate a calm situation in Gaza and the situation in Lebanon. In the past week or so, there have been a number of explosions in that area. However, the globe is still not completely free of uncertainties. Plus, inflation is still a problem. Keep in mind that the M2 money supply is being increased by the Federal Reserve. Quantitative easing with a twist. Additionally, silver is still in a backwardation phase as well. Distinction of about $1 between silver's futures price and its spot price. That implies silver is being supplied to bridge that difference, which means there is likely still some pressure on the LBMA. In my opinion, it will. Things will probably settle down soon. Prices may remain stable for some time as a result of that. That stabilization, though, I predict will remain over $40. I realize it's utterly ridiculous to say this just moments before the markets close, but it's still $48.59 right now. However, that is the current situation, everyone. Honestly, I think we're still doing very well if we can hold off over $45. I also believe that we will discuss $50 again before the year ends. That is how I feel about it. In the space provided below, please share your opinions with me. It is my sincere wish that you have derived anything useful and instructive from this video. Please help me out by giving this video a thumbs up, sharing it, leaving a comment, and subscribing. Your time and attention are greatly appreciated.